from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, crypto evangelists converge on Miami as the big Bitcoin conference gets underway. We'll have all the predictions and innovations from Jack Dorsey, Mike Saylor, and the Winklevoss twins. Plus, we'll introduce you to Bitcoin rewards company Lowly. And at least 2 years. That is the amount of time you won't see former President Trump on Facebook. The social network delivers the decision to keep his account suspended. We will have the latest and reaction. And Apple's Signature Developers Conference kicks off next week. We're going to tell you all about new iPhone updates and MacBooks you can possibly expect to see at WWDC. Those stories in a moment, but first the markets where stocks reacted to the latest U.S. jobs report, and cryptocurrencies were worth watching today. As always, Bloomberg's Kriti Gupta has the full picture. Kriti?
Emily, green on the screen in the stock market. You can really see right here the S&P 500 in the green, as well as the tech stocks, NASDAQ 100 outperforming. And on days that tech does really well, semis tend to show them up just a little bit, outperform even more. And that's what you're seeing here with the stocks index up a whopping 2.4%. But why? Why all this green on the screen? It has everything to do with the jobs report. And this is really where it gets kind of interesting because it wasn't actually that great. 675,000 was the estimate. We got 559,000 new jobs. So you are seeing a disappointment there. That was good news for stocks. And why? It's because we're re-entering that theme where good news, or I should say bad news, is actually good news for stocks. A lot of this has to do with the Fed, this idea that when you start to see negative economic surprises, which is really what this chart is showing, it tends to be positive for stocks because it says, hey, if it's bad news in the economy, the Fed isn't going to waver. It's not going to change their support. And that's really why you saw stocks in the green. And something else that actually did fairly well on the week, Emily, was Bitcoin. This comes after 2 weeks of drops that were over 20%. Positive week for Bitcoin. Today doing kind of iffy, but on the weekly basis, not too shabby. That being said, we still have to wait for the weekend. Anything can happen. We could get another tweet. Let's wait and see, Emily.
Right, and of course, last weekend was a roller coaster for crypto. Kriti, thanks so much for the roundup there. I want to stick with crypto now and talk about the largest conference ever on cryptocurrency, which has been underway in Miami, attracting over 20,000 attendees, including top tech founders and CEOs. Here's some of the top sound from the day.
If you're looking for a safe haven, I see Bitcoin as the most secure, most reliable, most certain thing in the entire economic universe. And if you're looking for some place where you can store your life force or your economic energy, you know, there's no real question.
A fun fact, there's 46 million millionaires on the planet. It's only 21 million Bitcoins, so they won't own a Bitcoin. So if you own a Bitcoin today, you will be a millionaire in the future, for sure. Congratulations.
Everything about it is why we're into it. There's nothing else that compares to it. And we have no interest other than making sure that we are building a native currency for the internet and helping in every way that we can. So all the other current coins, to me, don't factor in at all.
For more on the event, I want to bring in our Bloomberg Intelligence analyst, Mike McGlone, who covers crypto markets, and he is on the ground in Miami. Mike, set the stage for us. Talk about the atmosphere of the huge conference post-COVID. What can you tell us about the scene?
I mean, it's like a Woodstock of cryptos, and it's such a unique event because everybody here knows they're safe. It's one of the biggest places everybody's come out to be together without masks. They're not going to catch the virus, and it just happens to be Bitcoin's a key theme. Some of the so the lines to the bathrooms are long. There's not a lot of food, but everybody's just in a good mood and happy. Partly because that's after you expect after this major event, and they're talking about Bitcoin. Now that's what you hear on the stage, but behind the scenes, a lot of the talk is more about the bigger space and DeFi and what's happening with Ethereum and all the digital other currencies. Because Bitcoin's a focus. It means, like Michael Slayer said, you said here, it's a digital reserve asset. But behind the scenes, it's all like, oh, this space is really growing, and we're just happy to be part of it.
Obviously, the people there are mostly crypto supporters. I mean, what do you make of some of these broad pronouncements, like, the Winklevoss twins saying that you will be a millionaire if you own one, when nobody knows for sure that that is true?
Yes, I'm really skeptical of those kind of statements, because that makes people buy things sometimes and take more risk than they really should. Now, as part of a balanced portfolio, some allocation makes sense. But that sometimes kind of scares me. But the thing I have to respect from the Winklevoss twins is they've been steadfastly right for almost a decade now. And you just got to kind of go with it once in a while. And it's also the trends going their way in the macro. And that's what really kicked in during COVID, is everything's going digital. And that's what's also a unique thing that's happening in the space. The world's going digital rapidly. And the part of that key thing is Bitcoin started it, but it's also digitalization of the dollar is rapidly increasing. You're seeing that from the stable coins really kicking. Their volume is much more than Bitcoin, and that's all part of the system, part of Ethereum. Ethereum is the building block, and it's happening organically without central banks involved, without regulation. So it's the whole space that matters. But yes, I think there is a lot of speculation. We have to be very careful. 10,000 cryptos now is a bit of an excessive amount, but Bitcoin, again, is the number one, and it's more the digital version of gold.
So let's talk about real companies that are building real crypto features into their products, one of which is Square, which of course has also been investing in cryptocurrency. I want to take a listen to more of what Jack Dorsey had to say when it comes to building a hardware wallet. Take a listen.
We don't want to compete with the hardware wallets out there. We just want to take it to the next level and get to 100 more million people who have non-custodial solutions. And we're likely to do it sometime very soon.
Likely to do very soon. He's talking about building a Bitcoin hardware wallet. How significant would that be, Mike?
Well, it's all part of the custody where ETFs come into space to help add legitimacy. And it's one thing I heard someone today, what this represents, this whole conference with that many people here, is adoption. It's global, it's macro, and everybody's getting into it, most notably institutions. But institutions need they need the custody, they need the stability behind it and the safety. And Square represents part of that, and ETF represents part of that. And everybody here kind of thinks, well, that's a matter of time. What's going to prevent those things from happening? It's just a question of when. And I think Jack Dorsey pointed out, I saw him right in I was behind stage. I didn't say hello, but he had a bit of an entourage. But I did walk right by him, and he makes some good stuff. By the way, there were some people who actually booed when he spoke. I was surprised, but they were the non-Bitcoiners. Very few of them here.
Interesting. All right. Thanks for giving us the atmosphere there. Mike McGlone, our Bloomberg intelligence analyst who covers cryptocurrency in Miami on the ground. Appreciate it. Meantime, Bitcoin's volatility has continued with Elon Musk tweeting Thursday, #Bitcoin and a broken heart emoji. The coin slumped in the moments following the tweet, underscoring the influence the Tesla CEO has on the cryptocurrency. Bloomberg spoke to the CEO of Binance US earlier about Musk's seemingly unlimited power to move crypto markets. Take a listen.
If Elon Musk is this interested in crypto, crypto must be pretty important. So I would start with that. And I think short-term market panics are never a good reason for anybody to buy or sell. You need to understand that you're buying and selling an underlying network that has enduring value. It's not about Elon's tweets last night. Focus on the fact that he cares about this enough to say something. And whether he's pushing markets up or down, that's probably good in the long term. Listen, in terms of the regulators, it all depends on what he's doing on the back end of this. I sure hope he's not trading when the prices move after he tweets. I hope he's not doing that for his own sake. But if he isn't, it's a country with free speech. We're building long-term value. I'm not really focused on yesterday's price movements. It's more about what happens in 5 years. That's going to go up.
Well, and of course, who knows? For more on how influential Musk really is in this market, Lowly co-founder and CEO Alex Edelman joins us. Lowly is a Bitcoin rewards startup. He is also in Miami for the big day. So, Alex, what do you make there of those comments from the CEO of Binance US about Elon Musk's influence? Do you think that's fair, or does he perhaps have undue or unhealthy power over this market?
I think it's great what he's doing. I think he's driving attention, and he's clearly very influential. So any sort of eyeballs that are coming to Bitcoin that's making them question money in general is net good for the space, for Bitcoin, and for people that are following him.
So Lowly partners with stores to give you Bitcoin rewards when you shop. Talk to us about what your priorities are and why a store would partner with you when folks can just pretty soon get a crypto credit card from Gemini and get rewards that way.
So we give up to 30% back in Bitcoin rewards, and on average 7%. So it's going to be way higher than your typical debit or credit card. So a lot of people use it on top of debit and credit cards in addition to your points or whatever cashback program you're getting. So it's not competitive with any of these credit cards or debit cards or anything like that. It's all additive. I think people are very familiar with like Honey or Ebates and those sort of cashback programs that save you money, give you free money when you shop online. So in our case, we have some amazing merchants on board. We have Nike and Kroger, eBay, Adidas, you name it, and you can pretty much earn Bitcoin back from them.
Has demand waxed and waned with the volatility? I mean, I know, you've got one of the Winklevosses on stage today talking about Bitcoin going to 1 million no matter what, but we're at 37, 38 right now, which is still a far cry from the mid-60s high.
So when we started about 3 years ago, Bitcoin was around $4,000 a coin. And so our users have since, 10x their earnings. And then over the last 2 years, it's up 800%. So, our users are extremely happy. So if you've been using Lolly for even a short period of time, it's unlike cashback, it's unlike points. Your Bitcoin has gone up over time. And yes, we saw all-time highs over the last couple months and, a short dip. But people are really excited to be earning Bitcoin. And for a lot of our users, they've never had Bitcoin before. We, of course, clearly have all of these wonderful Bitcoiners that are in Miami and many parts of the U.S. But what's most exciting is that we're bringing new people into the Bitcoin space that previously would have not have had Bitcoin because we're attaching Bitcoin to shopping and earning as opposed to mining and investing.
Interesting. Well, it certainly looks like you're having fun out there, Alex. Appreciate the report. Thanks so much for joining us, Alex Edelman, Lowly co-founder and CEO. All right, coming up, former President Trump will have to live without getting any likes on Facebook for the next 2 years. The social network announced its extended suspension of Trump's account, stirring hot debate. We'll discuss it all next. This is Bloomberg. Former President Trump will remain banned from Facebook for at least 2 years, and the social network says the suspension will lift only in 2023 if the risk to public safety has subsided. To discuss, we're joined now by David Kirkpatrick, founder of Techonomy and, of course, author of The Facebook Effect. David, did Facebook go too far or not far enough?
Well, you might be surprised to hear me saying this because I've been very critical of Facebook in recent years, but I think they kind of went just to the right place in this instance. The proof will be in the pudding as to how they actually implement what they said they're doing today. But I was very impressed that they seem to have taken some very rational steps. It wasn't just extending the ban on Trump. It was really implementing a whole new set of guidelines for how they treat politicians and how they treat the notion of newsworthiness when it comes to politicians globally. And they made some big changes.
So let's talk a little bit about the reaction. Of course, there's the reaction from Trump himself saying Facebook's decision is an insult to the record-setting 75 million people, plus many others who voted for us. They shouldn't be allowed to get away with this censoring and silencing and ultimately will win. Our country can't take this abuse anymore. To be clear, it was just over 74 million votes. And then you have Facebook itself saying almost that it doesn't want to have this power, David. A lengthy statement from Facebook, this coming from Nick Clegg, him saying, we think that giving private companies the power as a commercial entity to sort of permanently banish someone from significant parts of online discourse is a very significant step. And at the end, American democracy doesn't belong to Silicon Valley. It belongs to the American people. It's legislators and politicians of this country who, in the end, have to govern the rules that prevail. What do you make of that?
Well, I think Facebook's right in theory. If government could really come up with a rational set of rules of the road for digital speed, it would be great. I'm skeptical that that would be easy to do, particularly in our current political environment. And the reality is, everyone needs to remember that commercial companies have the right to do whatever they want with their products. They don't have any obligations to host anything because somebody, even if it's the president or ex-president, wants them to. So Facebook is completely within their rights to do absolutely anything that they want. Now, I think separately, there has been a very serious question about the way they implemented that control over recent years. I think they have frankly capitulated to many politicians, including President Trump while he was in office, and in many other countries around the world in similar instances. So what I'm especially impressed by is that in responding to their oversight board, which is what they did today, they basically took almost every one of the oversight board's recommendations and made a serious attempt to implement them to come up with a more standardized, transparent, and fair set of guidelines for how they treat political speech by public figures.
So let's talk about the oversight board, because some folks think it shouldn't have ever gotten to the oversight board at all. I asked Natasha Lamb, an activist investor in Facebook, about this earlier today, right after this news about the suspension cross. Take a listen to what she had to say.
Board should not have to be dealing with these kinds of issues. It's very much the symptoms, not the sickness, why we're getting, the garbage at the end of the pipe versus why is the business model of Facebook been so damaging.
She's saying the oversight board shouldn't be dealing with these issues at all. Would you agree?
Well, in some sense, I would agree. I think there's been a failure of nerve, maybe a failure of bravery, and of even conviction and honor, even on the part of Zuckerberg and his company, in not having taken actions like this on their own a long time ago. It's kind of a brilliant stroke creating this board and then letting them make a decision, but then actually taking their advice and doing something that they might have had a hard time justifying if they had said it was just their own decision to do so. So in a way, they can sort of blame the oversight board for taking actions that are very difficult to take, particularly banning the ex-president for 2 solid years. It gives them a little bit of kind of air from the decision and say, hey, it's not us, it's the board. We're just taking their advice, trying to do what they recommended. That they didn't say specifically to ban him for 2 years, but they said that he should be banned, and Facebook had to decide what their rules were because they weren't implementing their rules in a consistent manner regarding the president up to now. The issue of the business model, which she refers to, it's a whole different question. That Facebook's business model does have a lot of pernicious effects in terms of incenting the company to basically allow anything to stay up that will keep eyeballs on the service. And that's something that many people criticize them for, but that's a really matter for another day here.
So quick question, David. We've only got about 30 seconds left, but you've covered Mark Zuckerberg from the earliest days. And I'm curious how much you think this decision was Mark Zuckerberg himself, how much he was influenced by Nick Clegg, or public opinion in terms of getting to this point.
Well, Zuckerberg said in 2019, he believed politicians should be able to do anything on Facebook. So this is a 180 for him. I think Nick Clegg was the player that really led to all of these changes, and that by his idea of setting up this oversight board and doing it very effectively, and then I'm sure he's the one that convinced Zuckerberg to basically accept their recommendations. I don't think Zuckerberg wanted to do this. I think he's probably very nervous about the implications it's going to have in many countries, not just the United States, if they really do have to come down harder on political leaders. But he has changed. He has very much changed.
Interesting. All right. Well, you know better than many people. David Kirkpatrick, Techonomy founder. As always, David, so good to have you back with us. We've missed you. Thanks so much for taking the time. All right, coming up, we're going to power up with our own Mark Gurman and find out what to watch at Apple's biggest event of the year. That is next. This is Bloomberg. Worldwide Developers Conference kicks off Monday, and like last year, it'll be an all-virtual event. But unlike any other year, it's being held in the shadow of an antitrust case brought against the iPhone maker by Fortnite game maker Epic. Bloomberg's Mark Gurman, of course, has more details in this week's Power Up.
Apple will hold its biggest event of the year on Monday. That's WWDC, or the annual Worldwide Developers Conference. This is where Apple will showcase major changes to the software that runs on the iPhone, the iPad, the Apple Watch, the Mac, and the Apple TV. For this year, I'm expecting significant changes to iPadOS 15 and iOS 15. Those are the iPhone and iPad operating systems. For the iPad, you can expect the biggest tweaks to the home screen since the first version of the iPad launched in 2010. For this year, Apple is planning to allow users to pin widgets such as your calendar, your weather, email information from third-party applications, and other cool snippets of information onto the iPad home screen. For the iPhone, you can expect significant changes to messaging, privacy, health tracking, as well as alerts on Notification Center, as well as the lock screen. For the Mac, expect a more muted update after the operating system was redesigned with macOS Big Sur last year. For the Apple Watch, you can continue to see more fitness and health tracking updates. For the Apple TV, expect some additional smart home functionality to better tap into the HomePod and Apple's other smart home ambitions. Of course, this year's conference is unique because Apple has been under more scrutiny than ever lately, especially with its trial with Epic Games from developers over the cut it takes. It will be up to Apple to prove to developers that the cut it takes, its app review process, and its rules continue to be worth it and continue to make both Apple and developers a lot of money in exchange for the technologies and new features it provides. I'm Mark Gurman. This is Power Up.
All right, coming up, a whopping $11 billion valuation. Enterprise software company Celonis may now be the most highly valued tech startup in New York and Germany. Co-founder and co-CEO Alex Rinke joins us next. This is Bloomberg.
If you arm us with the tool, meaning stock is a tool, if you arm us with the tool to go find value-creating opportunities for AMC shareholders, we can do that. If we're not armed with this tool, then you're tying our hands behind our back, and you'll make it just that much harder for us to land some of these attractive opportunities that benefit us all.
Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. That was AMC Entertainment President and CEO Adam Aron making the case for yet another round of capital funding. His comments came just hours after AMC collected $587 million in Thursday's share sale after a run-up by retail investors. Our Kriti Gupta is here with the crazy week that was for AMC. Kriti?
Absolutely crazy. Doesn't really quite begin to describe what we saw this week. I mean, take a look at this. Even with all of its volatility, still ending up on the day by a whopping 81%, on the week by 81%. At its peak here on Wednesday, tripling its value from where it started at the end of the week. And of course, we know that massive dip is where we saw those share sales. Investors not loving the idea that they are capitalizing on this opportunity, but it looks like it doesn't really matter in the long term. How does this compare to some of the other meme stocks, though? GameStop, for example, you are actually seeing GameStop do far fewer in terms of their percentage increase. AMC really skyrocketing here, putting GameStop to shame, even though, think about it, when you do have a rise in a meme stock like this, it does tend to take the other kind of stocks with it. GameStop, Express, Cost, all joining in on the rally, but not quite matching the like of AMC. And that, of course, brings me to the concept of, well, these are the two biggest small cap stocks. If you just look at their market cap here, $26.4 billion for AMC. That means it's actually qualified to leave the Russell 2000, not be the biggest heavyweight there, and actually join some of the large cap stocks like the Russell 1000, the mega cap stocks that you see in those Russell indexes, that rebalancing, though, Emily, is coming up. This could very much be a catalyst for small caps across the board.
All right. Pretty crazy, or more, indeed. Thank you. Moving on to Celonis, a process mining software company that just raised $1 billion, bringing its total valuation to more than $11 billion. The German startup provides user technology to help spot inefficiencies normally identified by high-priced human consultants. Its clients include Uber, Citibank, Dell, Pfizer. Joining us now for more on what Celonis is, co-founder and CEO, co-CEO, Alex Rinke. Alex, thank you so much for joining us. So as I understand it, your company basically provides software that does what an army of Bain consultants might do. Finding out things that are wrong, figuring out ways to improve the business, trying to figure out how to make cuts. Is that a fair characterization?
Emily, I think you explained it pretty well, we started developing this process mining technology. I like to compare it with an X-ray for a business, right? So you can take an X-ray of any process in your company and see what's going on and how you can improve. And we've moved on from that and created a platform that can't just spot these inefficiencies, but you can actually go in and fix them and improve how your business executes.
So the big question is, can you really do better than an army of human consultants that may cost a lot of money, but are boots on the ground?
Look, and we actually work together with consultants often. Our system can layer on top of any system and any process that a business uses. Right? Our customers go from Uber to 3 of the 4 vaccine manufacturers in the US. Any business can use Celonis, and it sits on top of the various systems they use to execute their operations. It finds what's going on, what's inefficient, and how things can be improved.
So walk me through an example of how Celonis may have saved, I don't know, millions of dollars for a company by using your software to do this X-ray, if you will.
Yes. So we are, for example, one of the largest healthcare device manufacturers in the US, GE Healthcare. They came to our customer conference and they shared how they improved $1.3 billion in free cash flow by looking at their order-to-cash process, identify inefficiencies, and then use Celonis to remove all the bottlenecks from their process. So they could, ship products to customers faster, they could get invoices out faster, and it had a significant impact on their free cash flow.
How has demand waxed and waned during the pandemic? Obviously, we know that digital transformation has accelerated for so many companies. I wonder if you see that keeping up, speeding up, or slowing down as the world goes back to normal.
Yeah, so we are one of the fastest growing tech companies out there. Actually, one of the fastest growing software companies ever. We've grown through the pandemic. We're growing faster than ever today. So, it's really not affected. If anything, it has increased the demand for execution management and process mining.
There's an interesting story about how you, and I believe it was some friends, founded the company by going into another company and then realizing that, hey, this could be something if we do it this way instead. Tell us the story in a nutshell.
Yes. So we learned about this technology actually at university. It was a little over 10 years ago. And we were very fascinated by the idea. But nobody had ever built a process mining system. So what we did is we started building a prototype and we showed it to some businesses, in Germany. And we found the first customer, and we were able to get their customer service process down from 5 days to have them handle over 80% of their customer service tickets on the same day. So we saw that the impact was transformational. They became our first customers. They referred us to the next 5 customers, and here we went and we started Celonis.
So $11 billion is quite a lofty valuation. I mean, are you close to going public? What are your plans for some sort of exit or next stage event?
Yeah, so we are all focused on the long term, building a great company. We think that probably the destination at some point will be the public markets. But it's really not, the timing of the IPO that we are thinking about. We are thinking about how to deliver value to our customers so to grow as fast as we can. We just raised, great amount of funding from backers that can back us in the private and the public market. So we are, we have all the options and are very excited about the next few years.
You're joining us now from Germany. You're based sort of in New York and Germany. Curious what it's been like running a company through a pandemic across borders, across oceans.
It actually brought us closer together in many ways, because we are a global team. I would say that we are all looking forward to have some personal interaction again and celebrate some of these rituals that we would like to celebrate as a team. But overall, I would say it's better than expected. And we will learn a lot from this for a hybrid future that is actually more sustainable for our people and also the environment. So, overall, I think it taught us a lot about how quickly we can transform.
All right. So does this mean Silicon Valley can be anywhere, not just Silicon Valley? There's a hot debate about that.
You got it. You got it. There's smart people everywhere. There's great innovation. And I think, honestly, if this has contributed anything, I think that it democratizes access to talent. We just hired one of the most senior finance leaders as a CFO. He's based in Silicon Valley. We have our executive team. Some people are in New York, some people are in Munich, some people are in Silicon Valley, and we all work together. We will meet regularly, but we don't have to be all at the same place. And I think it actually, globalizes innovation in many ways.
Interesting. All right. Good to have you, Alexander Rinke, co-CEO of Celonis. We'll keep our eye on you. Thanks so much for joining us. All right, coming up, the ransomware attacks continue. We will be talking to one business software company about how customers can better protect themselves in the cloud. That is next. This is Bloomberg. Further details are emerging in the Colonial Pipeline cyber attack that took down the largest fuel pipeline in the United States. According to a cybersecurity consultant who responded to the attack, the hack was the result of a single compromised password, just one. It's thought the hackers gained entry through a network used by employees to access remotely. The account was no longer in use at the time of the attack, but could still be accessed, and the password has since been discovered on the dark web. Meantime, with cybersecurity top of mind, PagerDuty, the cloud company that specializes in incident response for IT departments, reported first quarter results. This week, the company beat expectations, raised its full-year revenue forecast. Those shares have underperformed since the release. Analysts, though, still bullish for the long term as the world's emphasis on cybersecurity continues. Joining me now for more on the company's numbers and how to keep the sector safe, PagerDuty CEO Jennifer Tejada. Jennifer, always good to have you here on the show. So talk to us about the growth you've seen through the pandemic and how you see that evolving as we come out of the pandemic.
Well, we're really proud of our growth. I mean, it was a difficult year, I think, for many of our customers, but we also saw them accelerate their digital initiatives, their cloud migration, and even their DevOps transformation. And so those things have become long-term tailwinds for us. The macro continued to be favorable through this quarter, where we grew 28% year on year. And we also saw a lot of strength in international, up 38% year on year, now comprising 25% of our revenue. In particular, mid-market and enterprise have been strong spots for us, where our largest customers are growing the fastest. Our customers spending over $1 million were growing by 55% this quarter year on year. So all in all, as we see the pandemic start to dissipate and we see recovery, we like the trends that we're seeing in spending on more strategic projects.
Still, shares are down, way down today, almost 13%. What's your response to that?
Look, we're in this for the long game, and we posted a beat and a raise. It's hard to explain the stock market sometimes, but I think when you look at the momentum in our business, the bullishness around our guidance, I am convinced that we can accelerate the business based on the dynamics that I've seen, and in particular, the confidence that I have in our team's ability to execute, and the fact that we're still very early in this incident response market and in this digital operations opportunity.
You know, we have seen hack attack after hack attack. Security is so top of mind, especially with workers remote all over the world. What do you think is happening here? Why are hackers succeeding so frequently, so badly? And where is this coming from?
Well, I think it's a couple of things, Emily. One, the hackers are getting very sophisticated. I mean, they're run like professional companies. And two, there are a lot of companies that weren't as prepared as they could have been for remote work. PagerDuty has a zero trust security stance, which means we don't trust anybody or any device, which made our transition to remote work pretty seamless and very secure. But you know, that is, we're somewhat early adopters in that methodology. And if you look more broadly across the landscape, people are in a lot of different places on the continuum in terms of their preparedness and their security stance. And you know, having said that, we're now in a world where it's not a matter of if you get breached, it's a matter of when. And that's where your response is so incredibly important, and why we're seeing more uptake and demand from security and SecOps teams for PagerDuty, because we help you detect issues, but more importantly, we help you orchestrate the response very quickly. And a security breach of any kind, whether it's phishing, malware, ransomware, which often happen through like Colonial, just a simple password access or a phishing attempt to email, time matters. So you need a response platform that can help you orchestrate teams across different functions very quickly.
Many of these hackers are asking for Bitcoin or cryptocurrency as a form of payment. You do work with some major crypto customers. Some of these exchanges are also suffering from major outages, not necessarily tied to cybersecurity, but I'm curious how PagerDuty helps there.
Well, it's interesting. We have a saying inside of PagerDuty that uptime is money, and never has that been more true with some of these very innovative companies that are creating the world's newest currencies. And if their systems aren't available, they cannot manage transactions effectively, and they lose the trust of their customers. You know, we learned a lot about this even just working with more traditional financial services companies, which are highly regulated. You can't afford mistakes that put you in a position where you're violating compliance frameworks, much less losing the trust of your customers. So PagerDuty works with these companies to help them not only respond more effectively, but by leveraging our AI and machine learning based solutions to proactively preempt small events from becoming big business impacting issues. And that's where we've seen significant growth from large cryptocurrency companies in the US, Binance in Malta, and other companies in the UK. So we do think that is an emerging market, but it shares a consistent theme with most of our customers, which is their digital operations have become their business operations. The consumer learned during the pandemic that they can expect a level of convenience and ease in working with a digital version of the brand. And that means that the complex ecosystem of technology that helps you deliver that experience has become more important, and it's more important that you manage that very effectively.
All right, Jennifer Tejada, always good to have you here on the show, CEO of PagerDuty. Certainly an eventful year. It has been an eventful year, likely ahead. Okay, coming up, U.S. shipments of vaccines arriving in South Korea. We're going to have an update on the effort to rid the world of COVID. And SpaceX's Dragon cargo capsule is on target to dock at the International Space Station a little after 5 a.m. East Coast time Saturday. It is the company's 22nd resupply mission for NASA. Meantime, SpaceX is due to send another rocket to space Sunday, this time a satellite for SiriusXM. This is Bloomberg. The global effort to stop the spread of COVID-19 continues with a shipment of donated U.S. vaccines just arriving in South Korea. Here at home, New Jersey ended its 15-month emergency period, and the private equity firms Carlyle Group and Warburg Pincus told employees they will need COVID vaccines to return to the office in September. With more on where the U.S. stands with vaccinations, here's Johns Hopkins Bloomberg School of Public Health professor Andrew Picos.
They paid attention to the basic science, the basic research that was done for 10, 15 years prior to this pandemic, which gave us all the information that we really needed to look at this virus sequence when it first emerged and say, you know what? There are papers out there that tell us exactly how to make this vaccine. This looks exactly like what we've done before for this variant of coronavirus. And we moved forward then with lightning speed with the help of government that allowed to sort of cut through some of the red tape and move past some of the things that were slowing things down, but still allowed us to move forward in an efficient way, maintaining vaccine safety and maintaining ideas about efficacy as well.
Dr. Pecos, I'm going to suggest you and others have failed here, like the Baltimore Orioles in the beginning of the baseball season. When I look at the CDC report on mRNA vaccines, and let me quote, "The vaccine does not contain any virus, so it cannot give you COVID-19. It cannot change your DNA in any way." We've done a lousy job of selling that idea to people who are non-science and afraid. How do we change that?
Well, you know, I think the biggest issue is the communication that happens via social network mechanisms that really allows for things that are inflammatory, things that seem more challenging, things that seem more dangerous, but are yet not fact-based, to really spread like wildfire. And that is the hardest thing to sort of do. Historically, I've been looking back at some of the other years of vaccine hesitancy and with polio vaccines, and even going back to Robert Jenner and the smallpox vaccinations. There were people during that period of time that were incredibly anti-vaccine, even though smallpox was a disease that was horrific in terms of the damage that it was inducing in the population. So the social media outlets have just allowed these messages to be amplified much, much faster, and we're always impressed, or at least there's an impression that's made when we send these messages of things that could potentially be problematic or harmful. So it's a massive problem that moves away from the science and really into the communication fields and how to do that communication more effectively.
Speaking of communication, we are 30 days away from a self-imposed July 4th deadline. Where are we on the path to getting 50, 70, 80% inoculations, and can we all get free beer from it?
I love the idea of getting free beer for vaccination. Unfortunately, I got my vaccination before those incentives were out there. I think that we've slowed a lot in the past month to 2 months. We saw a massive surge. We got to 50% of the population getting vaccinated in an incredibly fast rate. We got our kids vaccinated when that became available at a very fast rate, but now we're seeing us settle into a level that personally I find underwhelming. We really need to push past the 70% guideline that has been set now by the government. I've always viewed that as a minimum. And what I mean by that is you reach that 70% and you'll have a massive effect on severe disease and hospitalization because you've immunized those sensitive populations. But if you want to get to the concept of herd immunity, where everybody, including the unvaccinated people in the population, are benefiting from people who get the vaccine, you have to push past that 70% level.
Johns Hopkins Bloomberg School of Public Health professor Andrew Picos there. All right, and that does it for this edition of Bloomberg Technology. By the way, Johns Hopkins Bloomberg School of Public Health is supported by the founder of Bloomberg, Michael Bloomberg. Make sure you tune in Monday when we will have all the details from Apple's WWDC event. Plus, I'll be joined by 23andMe CEO Ann Wojcicki and Visa CFO Vasant Prabhu. You don't want to miss that show. Coming up next, Wall Street Week with my colleague David Weston. The topic tonight, meme stocks. Thanks so much for joining us. This is Bloomberg.